thank you, Minister, for that overview. I think we were interested to hear your government's commitment to a sustainable relationship with the private sector and also with other stakeholders in the sector. I believe that these commitments are issues which need to be grasped, and I think also that we'd be looking forward to seeing the outcome of the review of the Mining and Minerals Act. I think the basis of the deal between government and private sector is well known to everybody in this room. I think also the importance of empowering your people at the same time with the proceeds from the mining sector and the lasting endowment in infrastructure is an important one, and I think these will crop up as issues in the panel discussions as we go through the morning. I'd like now to invite Tom Albanese of Vedanta Limited to make a keynote address, and I'm particularly interested in hearing how perhaps an Indian entrepreneur is looking at the African situation, because we're very much aware of the other Asian interests in the sector, and as somebody who's representing an Indian foundation, I'm very pleased to welcome you, ma'am. Bye.
Thank you, Jeremy, and Minister. We will all sleep a little better in London or Delhi when we have copper at $10,000 instead of $6,000. But in the meantime, we'll do the best with what we have. And I do really appreciate, Minister, your comments about the EITI. I do think it's so important right now to improve that bond of trust between government, the public sector, civil society, and companies. The only way we could do that is with complete transparency and all the financial, all the tax reporting. So I'm a complete proponent and buy into your vision for that. His Excellency, Honorable Minister, distinguished guests, ladies and gentlemen, and friends, I'm pleased to be here today to discuss the outlook of the mining industry and the impact on capital markets in its future. Given the commodity price volatility, the last few quarters have been testing for the mining industry, for copper mining, and for Zambia. However, as mining veterans know, such commodity cycles happen, and they can be weathered easily by high-quality mining assets with strong and committed management. And one such high-quality asset in our portfolio is Konkola Copper Mines in Zambia. I regularly visit Zambia, as the Minister knows, and along with our team, and our chairman at Vedanta, Anil Agarwal, and Stephen Din, our CEO of KCM, who's here in the room today, we all share a love for the country, and we all have a commitment for Zambia, not just in the next 5 years, but the next 50 and the next 100 years. Zambia is a country with mining in its veins. For me, it's very similar to Peru or Chile in South America. They have the heritage, the deep richness and the heritage of mining. And again, I do concur with Jeremy's remarks and the other remarks about it being actually a very attractive place in Africa. And certainly I've been invested in many, many countries in Africa, and I find it at the top end, the best end of those choices in Africa. We see that at KCM, the company operates across 4 locations. We have an open pit, and we have underground mines. We have several concentrators. We have a state-of-the-art smelter, a tailings leach plant, and a refinery, an entire production value chain from ore to cathode. And that's why, despite the fact that at the time of the purchase, copper was seen out of fashion when we first got into, Vedanta first acquired in KCM back in 2004, we have continued to invest since buying our 79.4%. We've invested more than $3 billion in the business, including sinking Zambia's largest shaft at Konkola Deep, building a new smelter at Nachanga, and upgrading a range of facilities, all which have prepared KCM for a profitable long-term future. And we're continuing to seek greenfield opportunities and maintain brownfield expansion. We're now looking at a mine life which has been extended by over 50 years, and a vision for KCM that extends beyond that 50 years and that sits at the heart of Vedanta's plan for its future growth in Africa. Not just in Zambia, but across the world, it's no secret the mining sector is facing some challenging times, with declining commodity prices and reduced investor interest in the sector. On the demand side, we know China's growth, which has been weaker than expected, with GDP growth flat at about 7% over the past 12 months. And again, I was just in Beijing a few weeks ago, and probably the GDP so far this year is probably less than 6%. So actually, the numbers are actually much slower than actually the official statements would be. And certainly my visit reinforced that China's move to a less commodity-intensive cycle to its phase will be a challenge for us into the future. Simultaneously, the mining industry globally is reaping the fruit of a year-long investment boom with the production of many commodities at very strong levels. So what we're seeing is a weakening of commodity prices across the board and investor sentiment, which is as skeptical and cynical that I've seen in many, many years. Speaking of investors, I do spend a lot of time with the financial community here in the UK and across the world. So I see that there are several things, particularly two, that the investors are looking at. They're looking at companies with strong balance sheets as they position themselves to capitalize on opportunities on the rebound. And they're looking for, at this moment, strong capital return to the shareholders and a withdrawal from risky investments. So as a result, capital expenditures have been cut aggressively across the mining industry. While none of us like this state of affairs, we must remember that it's part of a normal commodity cycle. The sustained high prices of the last commodity cycle peaked in 2011. And I think government and miners alike fondly recall those copper prices at $10,000 per ton, whereas we see prices now, unfortunately, below $6,000 per ton. So now, reduced and declining capital expenditures have forced all the companies in mining and also in oil and gas to reduce its capital expenditures and focus on operational efficiencies to sustain profitability. And there's also been, again, across the industry, a focus from investors on cost performance and asset utilization. And as a result, major mining companies are focusing intently on improving the performance in the business. And over time, this will provide opportunities for smaller, growth-oriented resource companies if they can attract the necessary investment funds. Again, this is a time for opportunities with those as entrepreneurs and those who are brave. For companies with low-cost operations, debt reduction is the focus, while higher producers are struggling with profitability and seek to cut costs aggressively. So in this case, for this type of situation, the funds available, particularly for exploration, have been difficult to attract. But then, let's look a little longer term. If we look at commodity markets, there are signs of hope. The current challenging economic environment is not impacting on all commodities equally. Certainly, iron ore and coal are facing both weakening demand and strong production increases arising from sustained period of capital expenditure. So accordingly, the outlook for the next several years are pretty weak for those commodities. By contrast, if you look past the next couple of years, and the outlook for some of the base metals, like zinc and copper, is more positive. And as a matter of fact, zinc is getting ready to turn as we speak. In copper, we see the closure of some of the existing mines, and it's become increasingly difficult to get new mines started due to a host of issues, including lower grades, water scarcity, and community issues. This will be the challenge for the next generation of copper mines around the world. So we'll likely experience a tough price environment for our copper production over the next few years. But if you look past that, and if we can, again, sustain ourselves and survive and thrive over the next couple of years, the outlook is quite stronger as we expect to see a return to a more favorable price environment after the next 2 to 3 year period of time. As we look through some of the broad strategies that different mining companies are using across the world as navigate these difficult waters, I'd like to discuss KCM's own approach in Zambia. KCM, as we know, is a big company with a big legacy. For more than half a century, KCM produced most of Zambia's copper. It's one of the largest employers in the country. Vedanta is proud of this legacy and proud to carry it forward into the next millennium. KCM is one of the largest integrated copper producers in Africa, with mines, concentrators, and smelters and refineries in the Copper Belt region. KCM's Nchanga mine is one of the jewels of the Copper Belt, having been in operation since the 1930s. And as I mentioned, since acquiring KCM, Vedanta has invested heavily in these assets. When we made the acquisition in 2004, the Nachanga operations had an expected life of only 3 years. That was 10 years ago. We've been able to extend the life of these remarkable operations through exploration drilling and a strong focus on operational efficiencies. Just as significantly, and this is really where the future is, the company took the decision to develop shaft access to the deeper portions of the Konkola ore body at a cost of about $1 billion. Konkola is a host of a truly world-class ore body with a strong resource base, and we believe will enable it to operate for the next 50 years. It also has some of the highest grades in the world, and certainly of any copper ore body, with average grades of 3.5%. And when I look around the world and I look at all the people that are trying to develop 0.5% ore bodies, or underground ore bodies that are 1%, I'm recognizing we have a huge 50-year-plus resource at 3.5%. That's our commitment to get this right and make it right. And with this strong asset base, Vedanta sees a long-term future for itself in this country. So in order to ensure that's fit for growth and to sustain operations during this tough period for mining internationally, we have focused, as we said we would, on bringing down our cost of operation and increasing our volumes. Stephen and the team have been focusing on rigorous cost savings initiatives led by a whole series of dedicated teams across the business to reduce power outage, fuel and chemical consumption, and repair and maintenance costs. So as a result of these initiatives, we are seeing a substantial reduction as we speak in quarter-on-quarter costs on both an absolute and on a unit cost basis. And with these efforts, I am happy to say we are moving from what has been a negative cash flow environment toward at least a cash break-even environment. But still a lot of work needs to be done so that we can put the next stage of capital in to ensure that these high-grade resources can be sustainably producing well and long into the future. So we, Vedanta, are coming to the table on investment, on making critical management decisions to ensure the life of the business. But like every mining operation in Zambia, we'll struggle to achieve this task alone. Without a stable and predictable operating environment, it's difficult to push these global headwinds. And we saw this in 2014. As the Honorable Minister said in an interview just 2 weeks ago, and again referred to it this morning, the uncertainty of the last 4 to 6 months has meant production has taken a knock. But this year, following the election, President Lunga and Minister have sought to improve the relationship between the government and the mining industry. And they did this, the government, by establishing a clear commitment to establishing an environment of mutual respect. And I want to applaud the government for this. And they've been backing this mutual respect up with action. In February, the government amended the documentation requirements to reclaim VAT on future exports. And this is an important step for KCM as it enables our company to increase the purchase and treatment of third-party concentrate, which will allow for increased production from its smelter. The government also recently announced an intention to reduce royalty rates to 9% for open pit and 6% for underground mines, a measure we hope to see affirmed by the Parliament this week. These decisions are very encouraging, and it's an important step to ensure that Zambia continues to have that enabling fiscal regime that is stable and continues to attract continuous investments in Zambia. Friends, many African countries, there's a searching dialogue underway regarding the benefits that have flown from mining. Zambia is no exception. I'd like to add my voice to that dialogue. I believe that more can and must be done to see Zambia benefit from its mineral endowment. Despite a century of active mining, the country continues to suffer from serious poverty. Zambia is blessed with rich water and rich land resources and rich people resources. And this blessing needs to be put to full advantage. Zambia should be the breadbasket of Africa, and with our help, we hope it could be. We are in a mining industry that can help to realize this vision. If we keep on backing our investments and are able to respond and adapt to the global market, we'll be able to develop one part of the economy so that Zambian leadership can create and achieve a vision for the century as a whole. We must recognize that the mining alone will not just sustain jobs and livelihoods in perpetuity. And certainly as the mining industry becomes more and more mechanized, so agriculture, tourism, logistics, services, and trade will all need to make a bigger contribution to employment. We do have a 50-year vision for KCM and opportunities to develop the Copper Belt as Vedanta's copper hub for the group's future growth. And this vision depends on the Copper Belt realizing its potential. Making the Copper Belt a hub for the region and for African continent will require a contribution from a diverse range of sectors and industries. It will require unprecedented level of collaboration between industry and government. With the right strategy, carefully executed in partnership with government, donors, and civil society groups, mining companies can contribute to significant additional economic activity per year in non-mining sectors. And this has the potential to create thousands of jobs, specifically in agriculture, forestry, horticulture, aquaculture, services, and manufacturing. And let's just think about this. In the Copper Belt, we have qualified people that want to work. We have actually more water than what we know what to do with, given the high levels of water in the Copper Belt. And we have the infrastructure to bring materials in and agriculture products out. We have all the combination, the right combination for a world-class agriculture industry right in our midst of copper mining. And that's the vision we should help the country work together to achieve. So what we're talking about here is real sustainability in the creation of new industries around the business of mining. And I'd like to reemphasize we're meeting at a critical moment and encourage all participants in this conference to take an optimistic view. Zambia has abundant mineral potential and a strong skills base. With the right technical and economic solutions, there's no reason why this industry cannot make it through this particularly tough phase. Industry leadership is sound, and our relationship with government is respectful and close, and becoming more collaborative by the day. So we're not so far to achieving that stable and conducive policy environment necessary to put the industry back on an even keel, fit and ready to grow as global conditions ease. So if we do this work when copper is below $6,000, we can all be smiling and all sleeping sounder when copper is again above $10,000 per ton. Thank you very much.